Hey guys, what's up? Good evening. How are you guys doing today? What a crazy melt up. Can you guys hear me? I am supposed to be streaming already, I'm thinking. Is it the case? Please let me know, drop a comment. Because I cannot see myself quite yet. There you go, we hear you. Awesome. I don't know why. There you go. It usually takes me something like 10 or 12 seconds for me to be able to see myself on my tablet. There you go. So guys, thank you for joining me once again. What a crazy melt-up operation we had today. Thank you. Okay. And yeah, this stream is starting out later than usual. I usually start my live streams for you guys on Thursdays at around 4:30 p.m. But well, I was waiting for the result of Apple's earnings report. It was not a good report. I think that might be one of the stocks that I am going to go over. And I have a friend coming over in an hour, guys, at 6 p.m. Eastern Standard Time. I am going to have some beers. Well-deserved beers, I would argue, right? So I wasn't able, guys, to prepare anything for the stream. Just drop a comment. Let me know what stocks you guys want me to go over. And thanks, bro. You always keep it real. Thank you. All things Reese. Hello. You're Jed Williams. CH. Big Cash. Valerie B. Welcome back. Thomas Spector. Love your enemies. Do you really love your enemies? I mean, we should love everyone, right? St. Luke's. 5 points, Nate. Robert Gray. You're the best in Discord. Thanks, bro. Thank you. One of the best I've ever seen. Thank you. SPY. Okay. Guys, today we had the perfect definition of a melt-up operation. This was the textbook definition of a melt-up operation. So Russell 2000 goes up today 2.67%. NASDAQ goes up 1.78%. The Dow Jones goes up 1.70%. And the S&P 500 went up 1.89%. And take a look, guys, at this. I always tell you guys about the 11 sectors of the markets. Super, ultra, mega green across the board. Take a look at this. The 11 sectors not only managed to close the trading session in positive territory, but reflecting gains of more than 1%. Very, but very impressive. I just took a day trade. And with DraftKings after hours, I opened the trade a bit before the report was posted, and it ended up being a good report. And Lester Pedroso is asking me about DraftKings. Okay, so take a look. Very impressive, guys. Unbelievable. So the quote-unquote worst performing sector today was consumer staples. And this sector, which was, again, the quote-unquote worst performing sector, went up today 1.30%. Very, but very impressive. Take a look at the SPY, guys. We have gone up, or the SPY has gone up, check this out, guys, 5% in 4 trading sessions. Very, but very impressive. And obviously, the $1 million question now is, can this rally keep going? And it can. But we have 2 factors that we need to evaluate. The first one, Apple, which just posted earnings. You guys know that Apple is the most important stock in the markets, market cap wise. Let me see what is Apple doing after hours. It is down after hours, not much, but it is down after hours 1%. The report wasn't good, guys. I think that I can show you some factors about the report. So get this, guys. So this was the, let's say, most worrisome, aspect of the report. Q4 Greater China revenue came in at $15.08 billion, whereas the estimate was $17 billion. This was a $2 billion miss in China. And we have a bunch of concerns on the table about Apple when it comes to the health that Apple sales have as of now in China. So many people say that Huawei is eating Apple's lunch in China. And this report could be signaling in that direction, I'm afraid. And Mac revenue also came lower than expected by more than $1 billion. So Q4 wearables, home and accessories came in also lower than expected. So not a good report, guys. And the valuation of Apple is very expensive. So is Tim Cook going to be able to, I don't know, let's say stimulate the markets in order to kind of disguise this poor report? I don't know, by talking about artificial intelligence and stuff like that. I think that the press conference already kicked off. Yeah, it kicked off 5 minutes ago. So we need to keep an eye on Apple. If Apple happens to collapse once the press conference ends, then we might be about to see tomorrow some sort of slight pullback, at least, depending on as well the jobs report that comes out at 8:30 a.m. Eastern Standard Time. The jobs report, guys, used to be the most important macroeconomic report that we had access to before, the pandemic started out and stuff like that. You guys know that as of now, the most important report from a macroeconomic standpoint for the markets is the CPI data report, the inflation report. But that's a new situation because we have higher inflation than the last 40 years. But before the pandemic occurred, the jobs report, the monthly jobs report, was the most important metric that the markets were paying attention to. And tomorrow at 8:30 a.m., again, Eastern Standard Time, we have the jobs report of October. That is going to be a market mover. So if that report happens to come out, let's say, better than expected from a bullish perspective, I would like to put this information into context. And remember, guys, we don't really pay much attention to what the macroeconomic data says. We just pay attention to whatever the charts do once any economic report happens to be posted. But in the case of this specific report, guys, we have two very important metrics. The first one, the average hourly earnings. It is expected at 0.3%. If this metric happens to come out lower than expected, let's say even as expected, 0.3% or maybe 0.2%, which was the reading last month, that is going to be positive for the markets. And when it comes to jobs creation, the last report came out very overheated, reflecting 335,000 new jobs created in the month of September. And tomorrow, the markets are expecting, or the analysts or the economists are expecting, the economy to have been able to create 188,000 new jobs in the month of October. If we happen to have the following combination, guys, let's say that the report comes out at 160,000 new jobs, 150,000 new jobs, and the average hourly earnings comes out at 0.3%. This is the increase month over month, obviously, right? When I'm talking about the average hourly earnings. If this metric happens to come out as expected or even better for the bulls, below estimates, the markets are very likely to be able to shake off even a bad report of Apple, which is pretty much what we got from Apple today. This was not a good report. So Apple isn't doing well in China. This is a fact of concern for the markets in general terms. If you guys ask me about the SPY, and I am going to go over the SPY once again, okay, we have gone up 5%, guys. 5%. This is crazy, guys. In 4 trading sessions. Keep in mind, in a good year, in one good year, the average return of the SPY could be 12%. In 12 months, So go figure that, guys. Whereas in only 4 trading sessions, the SPY has gone up 4%. So this push to the upside is extended, and it wouldn't be weird if we happen to see some sort of pullback. And in that pullback, we are going to see if this rally that we are seeing as of now is nothing more than just some sort of bear market rally, and we keep going lower, because the bulls have made a ton of progress over here during this week, guys. They were able to recapture the 5-day moving average, and the 5-day moving average is starting to rise. This is a very good sign for the bulls. And yesterday they also recaptured and were able to close, as of now, 2 trading sessions above the upward sloping 200-day moving average. Very good job for the bulls. But nothing can go up in a straight line. So it would be normal, okay? Or let me rephrase that. In regular market conditions, there's nothing wrong with some sort of pullback down to the 20-day moving average. I am talking about $426, $425.50 each. This would be, again, regular market behavior after the SPY has seen a push to the upside of 5% in only 4 trading sessions. So a pullback down to this, again, as I was telling you, a pullback down to this 20-day moving average at around $425.50 could be a buy the dip opportunity. And going long, guys, let's say that tomorrow they happen to open the trading session with another gap up. It is going, for me as a trader, it is going to be very difficult to start long positions here, guys, because we are definitely due for some sort of profit taking. We are due for some sort of retracement. Let's say until a foreseeable area of support, which could very well be this 20-day moving average near $425.50, and then we can keep going higher. So we are due for some sort of pullback. But again, if the jobs report tomorrow happens to come out very favorable, let's just put it that way, for the bulls, don't be surprised if tomorrow we happen to open with another gap higher. If that is the case, I'm just going to be waiting for some sort of pullback. And by the way, guys, if you remember, last Thursday, I showed you an anchored value weighted average price that comes from the October low of last year. I want to show you this, guys. This is a very important technical indicator that I use a lot, okay? Take a look at this white line. Last Thursday, the markets were going lower. The general picture of the markets wasn't looking good at all. And I told you, keep an eye on $411 in the SPY. This white line that you guys can see over here is none other than an anchored value weighted average price, an AVWAP, that comes from the October low of last year. And guess what, guys? This AVWAP ended up acting as support to the penny. Do you see? This is the importance of the anchored value weighted average price, the AVWAP. So very good job for the bulls because they were able to defend in a successful way this AVWAP. And now let's see what happens, guys. We are due for some sort of pullback. It is going to happen. You can mark my words. And whenever a pullback occurs, we are going to see, as I just told you, we're going to find out if this is a bear market rally inside a downtrend, or we are going to see if the bulls can defend a, let's say, logical area of interest, support-wise, and then we can keep going higher, maybe up to this upward sloping 100-day moving average near $438. So we have some sort of interesting trading sessions coming up, no doubt about it. How long would that pullback or for SPY take? Love your enemies. I don't know. I mean, tomorrow we could have some sort of bilateral trading session because we have a very important macroeconomic report coming out. If the report happens to come out, guys, I'm overheated when it comes to jobs creation. If that number happens to come out way better than expected, Or I could also say way lower than expected. Way lower than expected. That isn't going to be good news for the market. And if the metric that I just told you guys about, the average hourly earnings, happens to come out very high, which I don't think is going to be the case, then we're going to see a lot of volatility and maybe a pullback down to this 20-day moving average could go lower. So this support at around this potential area of support at around $425.50 might not be acting as such, but maybe. And according to your question, we could trade lower for 2 trading sessions. Maybe we can have a red day tomorrow, some sort of profit taken, and maybe on Monday. So maybe we could be heading down to this 20-day moving average near 425.50 in the next 2 trading sessions. And if that area happens to act as support, we can keep going higher. And also keep in mind, guys, that the seasonality favors the bulls as of now a lot. A lot. And on top of that, we when it comes to the mechanical factors of the markets, we have the 2 necessary ingredients on the table. What are those 2 ingredients that I am telling you guys about from a mechanical standpoint? We have the 10-year Treasury yield, or TNX, pulling back. This is very positive for the markets, and the 10-year Treasury yield is already trading below the 5 and the 20-day moving average. This is positive for the bulls, obviously. And on top of that, we are also seeing the Dixie, the US dollar, pulling back. So the mechanical factors are on the table. The seasonality factor is also on the table. So in my opinion, okay, unless something unexpected happens, guys, I don't know, maybe, TNX starts to go higher along with the Dixie, or maybe the conflict in the Middle East gets out of control, which I don't think is going to be the case either. So I'm thinking, as of now, today, okay, November 2nd of 2023 at 5:15 p.m., I'm thinking that any pullback of the markets, and let me see what this pullback in the SPY would be, and percentage-wise, let me see. So this would be, this pullback, guys, that I am telling you guys about down to the 20-day moving average, this would be a 1.20% pullback. Nothing crazy. So I'm thinking that this could be a buy the dip opportunity, okay? So I would say, I am tactically bullish into the end of this year. Let's just put it that way. And when it comes to the SPY, you don't need to be worried, guys, about the SPY. You guys know that I am narrating every single trading sessions in detail on Discord. So I am going to be available on Discord, letting you guys know the areas of interest, the pivots, and stuff like that. So you don't need to be worried about the SPY. Okay. There you go. So I am expecting a pullback unless something unexpected happens. Again, if the jobs report tomorrow happens to come out way overheated or way weaker than expected, then maybe the markets could be digesting that report in a negative way. But again, just forget about the report. We just need the charts, okay? Remember, guys, price, or the price is the absolute arbiter here, okay? Any macroeconomic report is posted, we just need to let the technical charts let us know what we need to do. That's just it. Okay, stocks to go over. Hello from Fort Lauderdale. There you go, Elgin. Hello from Charlotte in North Carolina. Who of you guys has been to Charlotte? Raise your hand. Who of you guys has been to North Carolina? Let me know. Alvaro, Leslie Williams, your analysis helped me again. Helped me gain over $1,700 in a swing trade call option today. Wow, brother, awesome. More, please. Awesome. Do you think the gap on SPX or NASDAQ will get filled? By the way, let me show you this gap. And this is also reason. This is also reason that I can tell in order to be maybe still maybe bullish into tomorrow's trading session, even though I am expecting some sort of pullback. Guys, this is the NASDAQ 100. Okay? You guys trade left and right the triple Q. And the triple Q is none other than an ETF of the Nasdaq 100. So when I am taking trades with the triple Q, I, believe it or not, guys, I follow or I make my decisions based on the SPY and based on the Nasdaq 100. And take a look at the closing price of the Nasdaq 100 today. 14,919 points. And when it comes to major indices, guys, such as the Nasdaq 100, the fat numbers tend to act like a magnet. So we have an unfilled gap over here up to 15,000 points. And by the way, let me take a look at the 100-day moving average. And yes, guys, take a look. This upward sloping 100-day moving average, in the case of the Nasdaq 100, is signaling 15,050 points. This gap might be getting filled sooner rather than later, in my opinion. Hey, Georgette is in the Bahamas. Awesome. Wow. I'm jealous. I'm jealous of you. Today we had a very cold day here in Charlotte. Okay, Broadcom is the first stock that you guys want me to tell you about. Broadcom, and we are 21 minutes in. Okay, I have like 30 more minutes. Okay, so Broadcom goes up today. I mean, what stock didn't go up today, guys? Today was crazy melt-up operation, guys, the one that we saw today. So Broadcom went up today 2.15%, and it closed the trading session at $871.30. So did the bulls or were the bulls able to recapture the 100-day moving average? Yes, they did. So guys, very bullish technical chart over here. So we have an upward sloping 200 DMA, upward sloping 100 DMA. The bulls lost as support the 5-day moving average, which is a moving average that you guys know that I use in order to determine who is in charge of minor time frames. And as of now, the tape is bullish, guys. The bulls are trading once again above all the moving averages. This is one. By the way, I had a guy on my Patreon asking me today about Broadcom, and I'm thinking, guys, that as long as the bulls can consolidate above $862, which happens to be the convergence. Let me double check on this. No, yeah. So listen up, guys. At $864, we have the convergence of the 20-day moving average and the 100-day moving average. So if the bulls can consolidate above this area, I think that there are higher prices coming up for Broadcom, guys. So above the current price of the stock, we have a potential gap up to $888. $888 is a previous resistance back from early September. And this is also a previous resistance back from mid-August. And above this level, there's another gap up to $925. So in my opinion, guys, and again, in regular market conditions, if the semiconductor, most of the semiconductor stocks are going higher tomorrow, along with the Nasdaq 100 and the SPY. I mean, long story short, if tomorrow we keep seeing another melt-up operation or follow-through after the massive green day that we saw today, I have two potential scenarios here, guys. One would be a little retracement of Broadcom down to the convergence of the 20 and the 100-day moving average near $863-ish. This could be a buy the dip opportunity, or maybe another scenario, and this is a very volatile stock, guys. Watch out for Broadcom taking out or bursting above $885, because if that were the case, we could be seeing the stock of this company filling this next gap up to $906 approximately. And this is a gap that I just told you about. Let me see. No. So we have, let me double check on this, guys. So the first gap that we have over here, yeah, $888, previous resistance, and above $888, two more gaps, okay? I am going to make a correction over here, $907 and $924. So bursting above $888, there's room, first of all, up to $906. Very good technical chart for Broadcom. Let me take a look at the market structure of AVGO. And again, guys, you know that I am 100% improvising over here. So if you detect any mistakes here and there. I do apologize. And this is not AVGO. Let me see. Broadcom. You guys know that this is a tool that I use always, all of the time. Market Structure Edge. This website allows me to see the demand and the supply of any given stock. And when I take a look at these charts, I am looking for imbalances. If I have an imbalance that favors sellers, I am more prone to buy puts of that stock. And if I have an imbalance that favors buyers, then obviously I am likely to go long with that stock. In the case of AVGO, we have a fallen demand, but also, guys, a fallen supply that is below average. So we have some sort of tie here between buyers and sellers. And the technical chart, since the bulls were able to recapture the 5-day moving average, and since the 5-day moving average is starting to rise, I'm thinking that the demand is about to pick up and that the supply is, the supply will keep falling. So this is a stock that I am going to be, that I will probably have on my watch list tomorrow. Sure. Again, Lilly. Leslie's always asking about Eli Lilly. They posted earnings today, right? And take a look at this, guys. Take a look at this, the movement that we saw today in Lilly, guys. Let me see if I can show you this with the 100-day moving average. Take a look at the importance, guys, of this moving average. So Lilly collapsed today, pre-market, as soon as the earnings report was posted. And take a look at the spot at which the stock of this company found support at, and immediately after that bounced back up. $520. Was this a coincidence? No, it was not. Why? Because $520 happens to coincide with an upward sloping 100-day moving average. And remember, guys, the slope of any moving average is very important. If a moving average is upward sloping and it is tested as support, it is very likely to act as support. And on the flip side, if a moving average is downward sloping and it is tested as resistance, since it is downward sloping, it is very likely to act as resistance. So you need to understand and keep an eye on the slope of any given moving average. So yeah, the bulls bounce back up to the penny from this 100-day moving average. And if I zoom in here, Lilly ended up going up today 4.66%, and it closed the trading session at $580.29. And take a look, guys. So the bulls were able to recapture not only the 5-day moving average, but they closed slightly below the 20-day moving average. So listen up. If tomorrow you guys happen to see, or Leslie happens to see, Lilly recapturing this 20-day moving average, which is starting to rise. So in other words, if we happen to see Lilly consolidating above $585, this is bullish, guys. Because if that were the case, that would be implying that Lilly is once again trading above all the moving averages, which is a situation that we don't see, let me see, since October the 17th, guys. Yep. Since October the 17th. So this would be very bullish behavior. So if Lilly consolidates above $585, two potential gaps to the upside could be coming up. The first one, $600, fat number. And on top of that, a previous resistance back from late October and also back from mid-September. And ultimately, the gap up to the all-time high at $623. So another stock that I will be keeping an eye on tomorrow if I see it trading above $585. Let me take a look at the market structure of Lilly. I would say that this market structure should be looking a bit crappy because Lilly was getting killed until today. And yes, it is. Take a look, guys. The demand or buyers were nowhere to be found until the earnings report came out today. And the supply is rising. and way above the demand. I guess that this market structure, since we saw Lily bouncing back up very nicely today, this market structure should be looking quite different tomorrow when I check on this. So that's my level, Leslie. Keep an eye on $585. Above $585, this could be a buy, in my opinion. Lululemon. Let's go ahead and take a look at Lulu. 5:30 p.m. Alrighty, goes up today 2.08%, and it closed the trading session at $403.50. Okay, sorry guys, let me take a sip of Sprite or whatever this is. Sprite. Okay, Lulu. This is a bullish short, guys. Above all the moving averages, the trend is your friend until she throws your shit out the window, guys. So we have a big resistance coming up here, potential area of resistance coming up for Lily at $407. At $407, the bulls failed on October 23rd and also on September 1st. So could this be a breakout trade over here, guys? Yeah. And this is a stock that when trades on good volume and momentum, guys, this stock can go up on one single trading session, $15-20, no problem. So keep an eye on this breakout, guys. If the bulls take out $407, we have a potential gap up to the, I would say, all-time high of Lulu. This should be the all-time high, $420. This could very well be a breakout trade. And let's say that we take this trade, guys. I mean, and by the way, guys, these are the trades that I like the most. Breakout trades. I like to take long trades when I have the buyers on my side. And this technical short is obviously, very obviously, under the control of buyers. So let's say that Lulu takes out 407 from 407 up to $419. This could be a 2.20% profit trade. This is a very good looking short, guys. Another potential scenario could be a little retracement down to this 5-day moving average, $394. And on top of that, guys, this 5-day moving average, this white line that you guys can see over here, this white line. Let me zoom out here again. Okay. So this 5-day moving average is coinciding with a previous resistance back from early August and also a previous resistance back from mid-July. This could also be a potential scenario, guys, because by holding $394 as support, Lulu would still be trading above all the moving averages. So from $394 up to $408, which is the resistance that I just told you guys about, this could be a 3.24% profit trade. I am going to put Lulu. I'm gonna put it down on a sticky note, guys, because I didn't have it. I don't have it on my radar, and this stock could be running tomorrow. So thank you very much for the call out. Whoever asked about Lulu, it was Darren. Thank you very much, Darren. Let me take a look at the market structure of Lulu. What a good looking chart, bro. Lululemon. Let me see. I don't know why, to be honest with you guys, I don't know why women love this brand so much, but they really love Lululemon, right? If you take a look at the jogging pants of most women out there, all of those, most women are wearing Lululemon's jogging pants. It's amazing. So, and this is a very expensive brand, but they are selling everything like left and right. So, you know. Okay, the market structure isn't looking that good, guys. It is crazy how they love it. Unbelievable. Yeah, it is crazy. Yeah. Okay, take a look at the demand. It is collapsing. No, it isn't collapsing. It is falling, and the supply is rising. So we gotta be careful here, guys. This implies this. Take a look, guys. Over here, I have a bullish technical chart. I just showed you that the technical chart of Lulu is very bullish, but I have a fall in demand and an ascending supply. So I can tell that from a market structure standpoint, I have sellers starting to outnumber buyers over here. So I can tell given the market structure of Lulu that I just showed you, that $407 is going to be a tough spot over here. Okay, because sellers were, we can make the case that they were starting to take control of Lulu because we had a downward sloping 5-day moving average until 2 days ago. So this is going to be prime time for the bulls, guys. Let's see if they can take out $407. Okay, I love my snow bunnies. Okay. Okay, Tessie. Let's do Tessie, guys. Let me take a look at Tessie. Tesla. Don't we have a Cybertruck delivery party taking place anytime soon, guys? I think that I saw the news. Whatever. So Tessie went up today 6.25% and it closed the trading session at $218.51. Guys, remember, according to my opinion, the most important moving averages that I use, and you guys know it if you guys are watching my streams on a regular basis, are the 200 and the 100-day moving average. Get these, guys. So Tesla goes up today and stuff like that. It closed in the green. And take a look at the spot at which the bulls of Tesla fell at today, guys. Right at this upward sloping 200-day moving average. Right over there. Take a look. Right at $218. What an important moving average this is, guys. So we're still trading below two important moving averages, the 100 and the 20. The 20 is downward sloping. The 5-day moving average is starting to rise like little by little. So keep an eye on $210. $210 happens to be a previous resistance back from late March. So if tomorrow we see some sort of pullback and the bulls are able to hold this level of support, $210, they could be gathering momentum in order to make another push higher. And maybe, if that were the case, they might be being able to try to make another test of this 200-day moving average right at $218. If we happen to take this trade, let's say that Tessie finds support at 200. Let me see again. Oh, my bad, guys. So $209. And if it bounces back up, let's say that we enter the trade, or let's say that we start the trade at $210, $211. So from $211 up to the 200-day moving average, this could be a 3.30% profit trade. And remember, guys, and I am begging you, no support is a support after the fact. So please don't try to guess support levels. Wait for others to do the heavy lifting. So let other market participants to try to guess if a level that you are keeping an eye on is a quote-unquote support, and after that stock bounces up or bounces back up from that level of support, then you can start the trade. So what would be my mindset when it comes to this trade over here? Because some traders, guys, do this, and this is a mistake. Some traders see Tesla dropping tomorrow. Okay, it is dropping. Okay, $215, $213, $212. And some traders say, look, some traders think this way. Okay, I know that $209 is a previous. It is a previous area of resistance. So at $209, I am going to buy calls. This is a monumental mistake, guys. You wait for the stock in order to bounce back up from a potential level of support, and then you take the trade. So you wait for other buyers in order to let that stock bounce back up from that level, and then you enter the trade. Correct. You wait for confirmation. No support is support until, or let's say, no support is support after the fact. Okay? So you need to wait for confirmation. Stop trying to guess areas of support. That's why I always use with you guys the pivot. And you guys know the way that you guys know the way that we are using the pivot on Discord. So above a certain level, the buyers are in control. So we can be buying calls. And if that pivot happens to be broken to the downside, then we might be buying puts. Very well said, my friend Arab. Okay. So this would be the trade that I would be taking in the case of TSI. And if tomorrow we happen to see some sort of pullback in the markets, if the markets, at the end if the markets don't like the Apple report, or if the jobs report happens to come out either overheated or way weaker than expected, if TSI breaks, guys, this previous level of resistance that now might be, quote unquote, acting as support near $208, this could be a short opportunity as well. So I would say that, actually, I'm saying over here, I'm stating that Tesla is still guilty until proven innocent because the bulls are trading below both the 100 and the 200-day moving average. Let me see if we have some sort of improvement when it comes to the market structure of TSI. Let me see over here, Tesla Motors. And take a look, guys. Buyers are nowhere to be found, and the supply is starting to rise. So I would say that this bounce that we saw in the case of Tesla was because both the SPY and the triple Qs and the Qs bounced back up. This was not a Tesla buy the dip rally, guys. The market structure that I am seeing over here is clearly stating that buyers are nowhere to be found over here. The supply is rising, and it is about to burst above average. So simply, Tesla went up. How much? Tesla went up 13% because everything went higher, guys. That's it. And how often does the market structure report comes out? Every 24 hours. So the charts are updated, let's say, per trading session. Hey, by the way, guys, if you is this test information relevant for tomorrow? I'm thinking, yeah. I don't trust this bounce, guys. I don't trust this Tesla bounce. In my opinion, this stock is guilty until we can see the bulls taking out the 200-day moving average. On top of that, guys, if the bulls tomorrow open the trading session above the 200 DMA, and if you guys happen to see Tesla consolidating above $220, there's room up to the downward sloping 20-day moving average, $231. But a no touch below the 200-day moving average unless I see it bouncing from $209. Okay, is that website free? It isn't. I am paying a subscription of $100. It is an expensive subscription, but it is very useful. So, I am paying for that. Amazing Amazon. Let me take a look at Amazing Amazon. Let me see. Amazing Amazon. Anytime, no worries. Amazon. Okay. So goes up today 0.78%, and it closed the trading session at $138.07. Sorry, guys, again. You guys know that I've been streaming all day long. Today I started later than usual because I had to do something today early in the morning. But I have been streaming for my guys all day long. So, at this time of the day, my throat needs a bit of liquid. I am a bit tired over here. Amazon, the chart is bullish, guys. This is a good looking chart. We have an upward sloping 200 DMA, upward sloping 100 DMA, upward sloping 5 DMA. We can make the case that this push to the upside is a bit extended. So Amazon went up in a matter of four or five trading sessions, 18%. Wow. Yeah. But the chart is bullish, guys. So don't be surprised if tomorrow, and if we see follow through tomorrow, obviously, don't be surprised if the bulls of Amazon take out or burst above 138 bucks, this is extremely bullish. If the bulls can consolidate above 138 bucks, we have two potential gaps to the upside over here. The first one up to 143 bucks. This is a previous resistance back from September 11th. And another gap, or a second gap up to 146 bucks. Very, very, very good looking chart. Another potential scenario in case that we open lower tomorrow and maybe then we see a rip-off face rally into the closing bell and stuff like that. A retracement down to 138 bucks, which happens to be a previous resistance back from mid-July. This could also be a buy the dip opportunity because all the moving averages are upward sloping. Very good looking chart for Amazon. Let me pull up here the market structure of amazing Amazon. So what do we have over here? And take a look, guys. The demand was falling. It is starting to rise. The supply is starting to rise as well, guys, and it is above average. So this is some sort of confirmation that this push to the upside was very aggressive and that we might see some sort of profit taken in the upcoming, let's say, 1 or 2 trading sessions. So 136 bucks is an area of interest, or maybe even a bit lower, the upward sloping 5-day moving average at 133 bucks in order to buy the dip over here on Amazon. What time frame are you using? The 4-hour chart. Yeah, this is the time frame that I use the most. Let's just put it that way. And in order to do my, my technical analysis, I use for the most part the 4-hour chart. When I am like evaluating potential stocks in order to trade pre-market, I always use the 4-hour chart. If I cannot point out, if I cannot find very well-defined areas of support and resistance on the 4-hour, I use the daily. Okay. So you swing trade a lot. It depends. Not that much. No, I would say that most of my trades are actually day trades. But when it comes to determine areas of interest, support and resistance wise, I use the 4-hour. Yep. Sure. AMD, Advanced Micro Devices. There you go. Darren is asking about Google. Yeah, I think that I still have some more minutes. It is 5:47 p.m. Yeah, guys, because for real, I have a friend coming over. He should be here in around 30 minutes. But no worries. We can go over some more stocks. AMD goes down today 0.19% in the midst of a super melt-up day. That's curious. Why AMD went lower? That's curious, guys. So the bulls basically failed right at this 100-day moving average at 108 bucks. You guys can tell the importance of these moving averages, guys. Take a look. The bulls were struggling with the 100 DMA yesterday and today as well. And into the closing bell, they gave up. Like, okay, 100-day moving average. This is too much for us today. Maybe tomorrow we are going to be successful at trying to burst above you. Very important moving average, guys. Take a look at this, guys. This is the 100. Okay, this blue line that you guys can see over here. So the bulls failed right at the 100 yesterday and today as well. Fair enough. They failed right at the 100 on 3 consecutive occasions back in mid-October. And before that, they failed right at the 100 on 2 consecutive occasions in mid-September. This moving average is no fucking joke, guys. So the trade here is very simple, guys. If the bulls can open the trading session tomorrow above 109 bucks, and if they can consolidate above $109, then we, in theory, obviously, all of this is hypothetical, we have 2 potential gaps to the upside. The first one up to 111 bucks, previous resistance, as I just told you, back from mid-October, and then, and this is also a previous resistance back from early September. And above 118 bucks, 119 bucks, sorry, 111 bucks, I take that back. We have a potential second gap to the upside up to 114 bucks, which is a previous resistance back from mid-August. So above all the moving averages, so above this 100 DMA, guys, I think that there are most likely or more likely than not higher prices coming up for AMD. And another potential scenario would be the bulls starting to work on some sort of bullish rectangle over here, like this. Yeah, this could also happen, guys. Take a look. They could be, go like back and forth inside this improvised bullish rectangle in order to gather momentum to finally take out this 100-day moving average. There you go. So let me take a look at that is the 1.5% or 2%. What are you asking me about? ARA, what 1.5 or 2%? You mean the push to the upside of AMD? Let me take a look at the market structure over here. Wow, the market structure doesn't look good at all, guys. Despite the fact that AMD has been going on a tear, huh? This is curious. Is this AMD? Yeah. I don't know, guys. I mean, this market structure. I cannot reconcile this market structure with the technical chart of AMD. According to this market structure, buyers are nowhere to be found, and the supply is rising. But the technical chart says otherwise. I don't know. I would have to take a look at this chart, at the market structure chart tomorrow. But I would be a buyer of AMD above this 100-day moving average. Yeah, let me do that math. So let's say that it consolidates above 108 bucks. So from 108 bucks up to, I said, 111 bucks. Yeah, this is a 2.8% profit trade, correct? Or this would be rather a 2.8%, 2.50% gap to the upside, correct? Yeah, correct. Google. So let me take a Google. Google McGoogle. Goes up today 0.79%, and it closed the trend session at $128.58. And take a look, guys. Where did they fail at today? 100-day moving average. Not a problem, bro. Anytime. Take a look. So nice push to the upside during the last 4 trading sessions, and the bulls failed right at the 100 DMA. And the same thing happened with AMD. So in my opinion, guys, this is an easy one. And I would say that the short of AMD is an easy one, guys. If the bulls can recapture, in the case of Google, this 100 DMA, what I want to say here, if they can consolidate slightly above 130 bucks, we have a potential gap up to the 20-day moving average up to 131 bucks. So from $130 up to 134, this could be a 3% profit trade. So this would be the trade that I would be interested in the case of Google. Let me take a look at the market structure of Google McGoogle. And before wrapping it up, guys, I'm going to take a look at Apple. Okay. What is going on after hours? Was Tim Cook able to pump up the stock? Take a look, guys. The demand is falling, and the supply, but the supply is falling as well, very very rapidly. We can say, and below average. So my trade in the case of Google above the 100 DMA, consolidating above 130 bucks. Let me take a look at Apple, guys. What is going on with good old Apple? Is it holding the gains of today's trading session? It isn't, guys. I wanted to get some AAPD shares today, guys. I didn't do it. Once the report came out, the report wasn't good at all. It was a poor report. So AAPD, that's the inverse of Apple. So this is not a good sign for the futures of the major indices in general terms. I mean, it is in a collapse either, right? So Apple is down how much after hours? I think 3%. But I mean, it already. I mean, the expected move was 3.50%, guys, and we are seeing that move already. It is in a collapse. So the markets obviously didn't like the report, but the stock isn't collapsing either. I'm thinking, guys, and I just told you, I just told you some details about the report. I think that Apple should be going lower tomorrow, guys. I don't see any institution stepping in and buying this dip with the report that we saw today. So, and yeah, and as of now, guys, the bulls are trading. The bulls are about to lose the 200-day moving average. So below the 200-day moving average, Apple would be trading below all the moving averages. So the short turns bearish, and I am not going to be buying this dip, guys. Not even from a trading perspective. But if any of you guys is interested in taking a trade on Apple tomorrow, keep an eye on $165, which is a previous support back from October 26th. Not a good looking short, guys, below all the moving averages. This is the perfect definition of a downtrend, okay? Because we have lower highs and lower lows. So this is not a good time for the markets in general terms. Let's just put it that way. So this could validate the theory that maybe we are going to see some sort of retracement, and maybe the other 7 magnificents, but could be doing the heavy lifting. But now we don't have 7 magnificents. So now, what are the magnificents? The magnificent tech stocks that we still have? And Nvidia, Microsoft, Amazon, and Google, I would say. Meta, maybe as well. So, okay. Nvidia, Georgette is asking about Nvidia. Let me go over Nvidia quickly. Let me see if my guy is already here. My friend. Let me see. He hasn't. No, I think that he isn't here yet. Okay. Let me take a look at Nvidia. Yeah, we cannot, stream without going over Nvidia. Good looking short, guys. Upward sloping 200-day moving average. The bulls were able to recapture the 5-day moving average, and they are about to make a major, or they are about to score here, guys, if this were the case, a major victory if they can take out $440. I am going to be keeping an eye on this level because, get this, guys, this upward sloping 100-day moving average, and remember the fact that this moving average is upward sloping, that implies that it shouldn't be acting like a very tough resistance. So by bursting above $440, the bulls would be recapturing not only a major moving average such as the 100-day, but they would be at the same time bursting above a previous resistance back from mid-June. So Nvidia, guys, closing candles above $440. This could represent an opportunity in order to take a trade up to $455. $455 is a previous resistance back from early October, and this is also a previous resistance back from early August. And further up, $455. What about $475? Previous resistance back from October the 12th. So above $440, this is an extremely, and I mean extremely, bullish looking short for Nvidia. So this would be the trade that I would be thinking about tomorrow, guys. In case of a pullback, let me see. What about a retracement down to the 5-day moving average, $418? And on top of that, $418 is a previous support. Yeah, this is a previous support back from July. This could also be a viable dip if, obviously, guys, there is nothing wrong going on with the markets. If the 10-year treasury yield is dropping and the DIX is dropping, you guys know the drill. And let me take a look at the market structure of Nvidia. Let me see. Nvidia Corporation. What do I have here? Yeah, take a look. The supply is starting to fall and the demand or buyers is starting to rise. This stock, guys, takes out $440. With the indices going higher, I am buying calls. More likely than not. On NVIDIA. And again, in regular market conditions, obviously. Okay, guys, I gotta wrap it up because as I just told you, I have a friend coming over. So thank you very much for watching. Thank you very much for listening. And remember, I am not going to be posting any pre-market commentary tomorrow because at 8:30 a.m. we have the jobs report coming out. So the jobs report comes out. Mrs. Market does whatever she's going to do. And a bit before the trading session opens, I am going to be calling bulls and strikes on Discord. Okay. Thank you guys very much. Okay. So enjoy the rest of your day, guys. Go grab a beer. I am about to grab a beer. Mark my words. Take care, guys. Love you. See you tomorrow. Okay. Thank you. Bye-bye.